Hi, this is Bob Iaccino coming to you from the CME Group trading floor in Chicago, talking crude oil futures. Well, there was a small recovery today in crude oil futures, and I say was, and I say small, because that's all it ended up being. We got a little bit of a bid after yesterday's 3% down move from open to close, and then that bid evaporated as the day went on. We finished down 23 cents at 50.62 in the June contract. Now, a couple of things that should be giving a bid to crude oil, at least in the short term, is an OPEC extension. There's potentially going to be an extension to the production cuts that OPEC put into place that were supposed to only last the first 6 months of this year. They were going to expire at the end of June. But we're hearing from both the Saudi Arabian and the Kuwaiti oil ministers that they've come to a tentative agreement to extend those cuts. Russia's supposedly on board. Their compliance, according to the Kuwaiti oil minister, has been good for this particular production cut. Iran, Venezuela also said to be on board. Those were said by Saudi Arabia. And if they extend the production cut, now's the time to do it. They probably needed to announce this prior to the 2 or 3 day sell-off that we've now seen, but they didn't. They brought it out this morning, did not put a bid to crude oil, and a lot of that has to do with U.S. production. In yesterday's EIA report, U.S. production was up again, over 200,000 barrels a day in production. That puts us well above that $9.3 million barrel psychological level. It is worth millions of dollars to these guys. But here's the thing. If we get above these psychological levels go in 100,000 barrels. So 9.2 to 9.3 is important. 9.3 to 9.4 is important. That's what matters. Now, the U.S. production being up again in the face of prior falling prices. This is production from when oil was down at this $46, $47, $48 level. We're back at 50. The break-even price has been going down about 10% due to U.S. Drilling technology, and the rest of it due to just slashing prices from less business. So the break-even point in most of the shale regions has dropped below $40. So that production is going to continue to ramp up. So if OPEC's going to get this production cut deal extended, they need to do it now. The geopolitical tensions, they matter, but again, that's more of a 1, 2, 3 separation. You know, you've got Russia, Iran, Saudi Arabia, and the U.S. in a proxy war, except that the headline risk of that has seemed to die down. We're all focused on North Korea now. So crude oil 50.62, looks like it might head lower. Today it should have been bid up. It wasn't. We'll see if we get more news out of Saudi Arabia in terms of this production extension. If they want to bid prices up, they need to extend it now. This is Bob Iaccino talking crude oil futures from the CME Group trading floor in Chicago.